It's Market Day Report. We're glad you're with us. Been trading for about 45 minutes. We have canola in the background, so let's look at the canola market. We're lower right now after a higher trade yesterday. Now, after the last three sessions, we've been lower 2 out of the last 3, so we'll see whether or not canola can rebound today. But again, in the red right now. Anytime we're looking at canola, have to bounce over and see what's happening with bean oil. Yeah, we are moving higher right now with the July up over 1 now at 75.60. Deferred contracts are moving up between 44 and 86 points. Since we're here, let's just stay in the complex. Soy meal, we're lower across the board. And we have soybeans as well. They've been lower 7 straight sessions. Maybe we're tired of red and trying to find some green. 11.35 3/4 on the November. It's a tick higher right now. We'll bounce over and grab wheat quickly, and the Chicago contract up 6, 5.89 1/4. We have hard red. It's trading 9 1/4 higher at 6.39, and then we wrap it up with the corn market, and we are higher here. You know, corn had been lower 6 straight sessions. Had a few contracts move higher yesterday, but December right now at 449 1/2. It's up 3 1/2. But 449 is a long way away from $5. Chris Swift is with Swift Trading in the studio with us. We've had quite a sell-off here.
Oh, we have. You know, I like to buy things when they're on sale, and corn is on sale. And especially when you got to look out deep into the future. July of 27, December of 28. Those kind of contract months deep out into the future there would offer livestock producers an enormous amount of leverage that now I can got my price fixed for whatever I know on my feed cost side of it deep into the future. And those kinds of things are priceless when you go in and start looking long-term planning, strategic planning for your operation. What are we going to be paying for feed costs? Wow, we just saw corn drop 12% in less than 12 days. It's an enormous kind of price movements there, so why not take advantage of them when they're here?
And I guess the other side of that is if the market continues to drop, you can get back in, right?
Well, and absolutely, and you're even buying it cheaper than what you thought, and which is really interesting because there's huge carry. That's what really shocks people is, oh, I don't want to pay that much for it. We're 422 corn right now. If you went to sell it, it's probably closer to 380, maybe even 370 out there on the real market, but the premiums that we've got, there are ways to manage those premiums out there, especially with options, and still be able to give yourself some leeway. May not be able to fix it exactly, but boy, I could create some enormous price windows that would be very beneficial to my operation deep into the future, regardless of whether the price went up or down.
Okay. I'm glad we went on the feed grain side here, because when we come back, we're dealing with let's talk feeders coming up. And the fact that we've got a border closed and this fly that's been flying around. We'll talk more about that in a moment with more Market Day Report. Let's talk livestock for a moment. We'll start with the live cattle market, and we are lower again. Will it be 2 sessions in the red? 244.90 on the June. It's down $1.62 in the August at 235 1/4. It's slipping $1.47 a hundredweight. Now feeders, we're lower here as well, off $1.32 on the August, trading 349.37 and just above 346 on that September contract. Now 346 1/4. It's $1.20 lower, and let's look at hogs as well. They've been lower 3 straight sessions, and with the exception of that July trying to hang on here at 97.52, all other contracts are in the red. We have Chris Swift with us, Swift Trading, and just looking at what's happening here in the market. Is this technical? I can't believe it would be a technical move. fundamental or something else?
We're trading unknowns right now. We know a few things. We know the flies here. We know how devastating it can be, but there's a lot of other things we don't know. And part of that factor is bullish, bearish of, do cattle outside of the inventory, outside of the quarantine area, are they worth more than those that are inside the quarantine area? Do I want to go out and bid higher for inventory, and then all of a sudden I find myself in a quarantined area and now I can't get rid of them? I think we're facing many more unknowns than we are knowns, and then we get to the aspect of individualism. I see it in my herd, or maybe I saw it in a deer or a pig or something around there. Do I report it? Of course, we want to report it, but there are some that may not. And so, because I don't want my farm quarantined, I just put out $3.5 million for this inventory. I don't want it to be me. So there's all kinds of unknowns that we know out there. But the one thing that I will say, and this is what I looked at last week, whatever you didn't like about the lower price, fix it. That's the easiest and simplest way. If you didn't like that lower price, you're still a little higher than where you were last Thursday's low, and you're starting to slink a little lower. So if you did not like that low, fix it. And then worry about what happens later, because it might be the best thing you ever did. It's highly unlikely that it'll be the worst thing you ever did.
Okay. And we're talking really at this point, cow-calf. We're talking, I guess, could talk stockers here. Could affect feeders as well. But let's talk more on the feeder side. You mentioned earlier the importance of locking in some deferred contracts on corn in the future, maybe 27, if you wanted to go out a little further than that as well. What are feeders facing right now, whether we're facing the Newworld Screw worm challenge or just tightening margins?
It's congestion at the center of the plate. The consumer has stopped the increase of purchases. They've stopped the willingness to pay more, and it's consolidating. And we see boxes not moving higher. That moves up to the grocer and restaurant, and now it's moved to the packer. The packer's still at 90% slaughter capacity. Could go to 89, would not surprise me. And then the cattle feeder, he's in the same boat. He's been restricting a lot of that inventory from moving out, but now we know we have a significant percentage over 180 days. It's really hot out there. We probably need to move some cattle sooner than later. To the cattle feeder, it's still about forward projection margins out there. They're still way over $380, $390 losses projected. Last week, they were able to make money again on it, but we believe that that's because the October-November timeframe was so much cheaper for feeder cattle, and those are the cattle being slaughtered today, and they're still being long-fed. We were at 985-pound carcass weights last week, I think.
Wow. Just adding more weight, really. That's the only way we can do that at this point. Chris, great to see you. Chris Swift is with Swift Trading here in Nashville.
All right. Thank you so much, gentlemen. Good to see you, Chris.